Snowflake, by the way, is under pressure today after missing earnings estimates. Stephanie Link owns it. She joins us now. We need to get her word on the backside of this earnings report, stock reaction. So what do we think here, Steph?
Well, I thought the quarter was actually pretty good. The only thing I really care about is product revenue growth, and that accelerated 5 points to 34% year over year. Daily query volume growth accelerated to 5 billion. Bookings grew 11%. RPO growth grew 46%. So the quarter itself showed that they are seeing stability in their core data warehousing business. That's the thing that I was worried about 2 quarters ago. That's the reason the stock was down 30% from last quarter to today. Today's reaction doesn't make any sense to me at all, and I will be a buyer when I'm not restricted. The reason it's down is because they're increasing their investments. And as a result, operating margins, they guided down 3 points, and they also guided down free cash flow margins by 3 points. Free cash flow margins are going to still be 26% versus the peer group of 19%. So I think people are fretting about this. They're overthinking it about competition. There certainly is competition, but I'm glad that they are investing, and they're investing from a position of stability and strength. So I will be a buyer in the next few days.
All right. Well, that's your headline. I'll be a buyer. You let us know exactly when you make that move.
I will.
Speaking of, you bought more Target. Let's take care of some more business while we have you. After the stock obviously was down on the other side of the earnings report.
Yeah, the quarter was basically in line. Maybe a few puts and takes. SG&A was higher than expected because of marketing, but gross margins were also higher than expected. And so I think they cancel each other out. The reason the stock is down, was down yesterday 7%, is because we were all thinking that by the end of this year they would see a 6% operating margin. They just posted 5.3% this quarter, and that was the disappointing. We all thought that they would get closer to 6, and that would yield them $10.50 to $11 a share in earnings power. They just reiterated guidance, and it's not $10 or $11. In fact, it's more like about 9 or so. And so to me, it was an overreaction because I don't think the margin story is gone from this company. And in fact, I think they are at an inflection point for Q2 to start to see a lot of these initiatives, which is eating at the margin, starting to lead to better same-store sales growth. I think you're going to see 0 to 2% same-store sales growth next quarter, 3% in the second half of the year, operating margin and gross margin expansion as well. You're trading at 15 times. I just thought it was way overdone on the downside.
Hey, where's the news that says Stephanie Link is buying DuPont on the split? I mean, this is your playbook. GE, 3M, what's going on?
This is my playbook. It's on my radar screen, Scott. I'm a little bit like on the industrial fatigue spin-out stories, right? We've had so many of them.
You only have so many of them.
But we do, and I only have so much cash. And oh, by the way, looking within industrials, you guys were talking about the SMH and data center and AI and all that. Look at Quanta, look at Eaton, and look at GE Vernova. All 3 of them are up today on the same theme. But DuPont, I think it's just going to take time. This is not going to happen until 12 to 18 months. And so I think I have some time. But the sum of the parts, Jeff Sprague at Vertical Research does great work on it. He has a sum of the parts of 102. So I am definitely keeping my eye on it. I'm a little disappointed Breen is not going to stay on as CEO, but he'll be executive chair and he'll see this thing through. So stay tuned on that one. I might buy it.
Yeah, first person I thought of today when I saw that news. Thanks for joining us, Steph. It's Stephanie Link.